In our previous video, we discussed about some of the examples which causes the differences between passbook and cash book. We explained in detail, right? In today's video, I'm going to explain the same examples, but I'm going to take one illustration and explain to you. Right? Are you ready for that? Hi, my name is Krishna Akumalla. Welcome back to my YouTube channel. Without wasting much time, let us get into the problem. Okay? Okay, guys. Let us get into the problem now. Let me first read the problem. Then I will explain in detail how to resolve this problem, number one. Number two. Number three, I'll give you some important tips. They're not blind approach, but I'll definitely give you some good important tips where you can easily understand how to prepare the bank reconciliation, right? So let us first read the problem. From the following particulars, prepare a bank reconciliation statement for Jindal Offset Limited. They are asking us to prepare a bank reconciliation statement for of Jindal. Balance as per cash book is 2,40,000. Balance as per cash book is 2,40,000. So balance as per cash book, sorry, not passbook. Balance as per cash book is 2,40,000. So this is the cash book balance. Checks issued but not presented in the bank amounts to 1,36,000. We issued checks, but they are not presented. Next, checks deposited in the bank but not yet cleared amounts to 90,000. We deposited, but they are not cleared by the bank. Bank charges amounts to 300. Bank debited 300 rupees as charges. So that also is the difference they identified. Interest created by the bank amounts to 1,250. So interest collected by the bank and created in our passbook. The balance as per passbook is 2,86,950. So here itself there is a difference, right? 2,86,950 is the balance as per passbook, and as per cash book 2,40,000. The difference is almost 46,950 rupees is the difference. So they are asking us to prepare the bank reconciliation statement. Simple. Certain important things I wanted to explain here, okay, so that it will be very easy for you to understand. Whenever cash book balance and passbook balance both are given in the problem, rule number one, whenever cash book balance and passbook balance both are given in the problem, you can take either cash book balance and start preparing the bank reconciliation statement, and you get passbook balance is the end balance. If you don't want to take cash book balance as the basis, you can take passbook balance and start preparing the reconciliation. Then you will get cash book balance at the end result as an end result. So whenever there are two balances given, either you can take cash book or you can take passbook and prepare your reconciliation statement. This is the rule number one. There are cases where they don't give, they give only one balance. Then there is no confusion. You can take that balance and start preparing the bank reconciliation. But the problem is whenever both the balances are given in the problem, either you can take cash book balance or you can take bank book balance and start preparing your bank reconciliation statement. This is one. Next rule is, while preparing the bank reconciliation statement, what we need to understand is the reconciliation statement will be prepared like this. This is inner column, this is outer column. So cash book balance we will put here and we will say 2,40,000. So these are the differences we identified, correct? These differences, how these differences are resulting in this cash book balance is something we need to look into it. How the result will be, some of these differences could be adding this balance, some of these differences could be reducing this balance. Impact. I'm talking about the impact. Suppose if checks issued but not presented in the bank 1,36,000 might reduce the balance, cash balance, or might add this balance might add to this 2,40,000. We don't know that. We will get to know very soon. Let me repeat again. Whatever differences we identified here, these differences might add to your cash balance. The impact can be added to the cash balance, or the impact of these differences can be reduced from the cash balance. So that is the reason we will say add and less. And what are the balances are adding? The impact is adding to the cash balance. The impact is reducing to the cash balance. That is what we need to prepare. So we need to take one balance, cash book balance or passbook balance, and some of the differences might be adding the impact to this, or some of the differences might be reducing the impact to this balance. So because of which you get to know what is the passbook balance. Are you clear? So whenever we prepare a statement, we will take one balance and we will put add and we will put less by giving some gap here. So in this gap, whatever transactions differences we identified here, those differences, if at all the impact is adding to this, then we will add them. If at all the impact is reducing, we reduce them. That is the rule number 2. Rule number 3. While preparing the reconciliation, what you guys need to keep in mind, how do I know the impact is going to be added or impact is going to be reduced? That is very important, right? See, today I said the impact can be added and the impact can be reduced, subtracted, correct? How do I know which difference is going to be added? Which difference is going to be reduced? How do I know? For that, one simple rule I will tell you, simple technique. You follow the technique blindly, you will definitely get a solution. When I say blindly, it is not a blind approach. I'm asking you to blindly follow my technique. This technique is with the subject, not without subject. I'm not giving any blind rules here. I will give you one simple technique. To follow the technique, then you will definitely understand which one to be added, which one to be subtracted, right? So how we need to do that is, whenever the bank reconciliation problem is given, my request to you is prepare cash book, passbook, debit, credit, debit, credit. Cash book, debit side is called receipt side, credit side is called payment side. Passbook, debit side is called payment side, passbook, credit side is called receipt side. Simple, you draw these two. Are you following with me? Put cash book, passbook, debit side receipts, credit side payments in cash book. In passbook, debit side payments and credit side receipts. This I already explained in my previous videos. Please refer that. Now, what balance we are going to take? Next question. Are we going to solve this problem by taking cash balance into account or passbook balance into account? That is something which you have to decide. I'm taking cash book balance as the base and preparing this reconciliation. So I'll explain. If you want next problem, we will take passbook balance and explain to you. Don't worry about that. So I'm taking cash book balance of 2,40,000. Cash book balance is an asset. So I will put 2,40,000 here, receipt side, here also receipt side. Are you clear? So why I kept 2,40,000? Krishna, passbook balance is 2,86,000. No, why are you putting 2,40,000 here in passbook? So the rule number one is whatever balance you are taking, please keep the same balance in both the books. Keep same balance in both the books, thinking that both balances are equal before preparing this reconciliation. What is assumption here? We are assuming that I'm taking cash book balance as the base for preparing reconciliation and assuming that same balance is there in the passbook as well. Passbook as well. I'm taking that as an assumption and preparing. So what balance I have taken into account for preparing reconciliation? Cash book balance. So what is that we are going to arrive? We are going to arrive passbook balance. So since we are going to arrive the passbook balance, please keep question mark on passbook. Please keep question mark on passbook. Now, why this question mark is kept? Since we took cash book balance, we are going to arrive passbook balance now. It is already given here, but we are going to arrive this balance, passbook balance. So we are finding out passbook balance now. What are we doing? We are finding out passbook balance. Hence, I kept question mark on passbook balance. Very simple. Now, third rule. Whenever this question mark balance is added, increased, not added. Whenever this question mark balance is increased, you need to add. Whenever this question mark balance is reduced, you need to subtract. That is the rule. So three important rules we are following here. First problem, I am repeatedly saying these three rules twice because this is very important. Going forward, we follow the same rules for any problem in bank reconciliation. So you have to be very careful. First rule, either you can take cash book balance or passbook balance as the basis. So in this problem, I have taken cash book balance as the basis. Clear? Rule number one. I draw cash book, passbook, receipts, payment, payment, receipts. Rule number two. I draw these two. Rule number three. The cash balance I kept in receipt side here, receipt side here. Same balance I need to put. Since I took cash book balance, same balance I need to put in both the books. Rule number three is over. Rule number four. You need to put a question mark on passbook. Why question mark is kept on passbook? Because I took cash book balance and I am finding passbook balance now. Since I am finding passbook balance, I kept a question mark on passbook. Rule number four is clear. Rule number five. Whenever this question mark balance is increased, you have to add. Whenever this question mark balance is reduced, you need to less. That's all. These are the five rules you need to follow. Now, let me explain how to resolve this problem. Okay. Now, checks issued but not presented in the bank amounts to 1,36,000. Checks issued but not presented. Who issued checks? Our business issued checks. When we issue the checks, what does it mean? Issued means paid. We paid 1,36,000 worth of checks to our suppliers. So that will come, we in the sense business. So as soon as checks are issued, the businessman, what he does is, he will record that in the cash book. What is this cash book? I already explained this. Once again, I am reminding you. Here, whatever cash book I am referring to, this cash book is 3-columnar cash book bank column. You should never forget this. What is this cash book? This cash book is nothing but 3-columnar cash book bank columns. Both debit and credit, whatever I am showing here in cash book, this is 3-columnar cash book bank columns. Don't forget this point at all. Now, checks issued 1,36,000. Business issued 1,36,000 worth of checks to the suppliers. That is nothing but a payment. So I need to record this 1,36,000 in payment side. As soon as checks are issued, I will simply write that in payment side. Very simple, yeah. Is there any rocket science in this? 1,36,000 I have recorded. They are not presented. That 1,36,000 is not presented in the bank. Suppliers did not go to bank. They did not claim that amount. Since they did not go to bank, they did not ask banker to pay that amount. Banker wouldn't have recorded that in payment side. Why banker did not record that in payment side? It is our payment, right? He has to record in payment side. Why he did not record in payment side? Because in the problem they said checks issued but not presented. But not presented, what does it mean? The checks issued but suppliers did not go to the bank. So banker did not write. Clear? So now what is the balance situation? 2,40,000, here 1,36,000. The balance is reduced. What is the balance? So one debit, one credit. This balance got reduced. But question mark balance is increased. Question mark balance is increased. Why? How can I say? Here you see 2,40,000 minus 1,36,000 is what? 1,04,000. But here it is 2,40,000. Right? Here the balance is 1,04,000. But here the balance is 2,40,000. That means what? This balance is increased. Question mark balance is increased. Question mark balance is increased. As and when the question mark balance is increased, you need to add that. Checks issued but not presented, 1,36,000. Are you clear? Why 1,36,000 we added there? 2,40,000 minus 1,36,000 is 1,04,000. This balance has become 1,04,000. But question mark balance, we need to see the status of the question mark balance. Status of the question mark balance is increased. Since status of the question mark balance is increased, I just added. Increased, I have to add. If it is reduced, I need to subtract. So I added 1,36,000. Are you clear? Right. Next one. Checks deposited in bank but not at cleared amounts to 90,000. When we deposit the checks, they are receipts for us, right? They are the amounts to be collected by the banker on behalf of us, right? We deposit it. So as soon as we deposit, we record that in receipt side as 90,000. But banker did not clear. Since banker did not clear, they wouldn't have recorded here. If they would have collected, they would have recorded here, but they did not. That is what the problem says. They are not at cleared. Since they are not at cleared, but I have recorded in our books. In our business books, it has been recorded, but it was not recorded in passbook. Now, what is that balance shows now? Cash book balance is showing 3,30,000 and your passbook balance is showing only 2,40,000. So your question mark balance is reduced. Your question mark balance is reduced. Since question mark balance is reduced, you just need to less that amount. Check deposited but not cleared 90,000. Simple. Next. So as and when we prepare like this, what we need to do is we need to again remove those points and keep working on again the word points. The next point. Bank charges amounts to 300. Bank charges debited by the banker. Banker will do that amount. So what they did, they debited 300 here. Because they debited 300, the balance is reduced. One debit and one credit. Sorry, one debit and one credit. 2,40,000 minus 300. So obviously it is 2,39,700. So this balance got reduced. This is 2,39,700, but this is 2,40,000. My question mark balance is reduced. So I need to less this amount. Bank charges debited by the bank 300. Are you clear? Let me explain the other point now. Interest credited by the bank amounts to 1,250. Bank credited 1,250. So credited 1,250. Now what is the status of the balance? This balance is increased. One credit and other credit, balance will increase. So question mark balance increased or decreased? That is the question you need to ask. The question mark balance is increased. Since the question mark balance is increased, you have to add that amount. Interest credited by bank 1,250. Very simple, right? You just need to monitor the question mark. If the question mark balance is increased, add it. If the question mark balance is reduced, you subtract it. Simple. Now you tell me what we are going to do now is, see, I'll simple explain now how to arrive the closing balance. See here in the problem, what did we do? We took cash balance as 2,40,000 and we arrived what are the balances to be added? 1,36,000, 1,250. So when we add these three, the balance has come to 3,77,250. And we also arrived what are the balances to be reduced? 90,300. So when we reduce, how much balance we got it? 2,86,950. That balance is nothing but your passbook balance. That balance is nothing but your passbook balance. Simple. This is how you need to prepare the bank reconciliation statement. Are you clear? Anyway, if at all there is a confusion, don't get worried. We are going to solve these kind of problems a lot now. So you will definitely get a clarity. You don't require to be worried about it. If you have any doubts, watch this video repeatedly. And if still you have any doubts, you please feel free to comment on my video. I will try to respond to your doubts. If you like the content, please like the video, subscribe to my channel, and share this video with your friends and colleagues. Thank you so much.